Hey, good morning, good afternoon. Hey, Tom, how are you?
Fine, thank you. Good morning to you.
Hi
Mor-
guys, good morning.
Morning to you as well. All right, who else do we have? It's been an exciting week, isn't it?
Volatility creates opportunity.
But only if you are ready to seize
Yeah.
the opportunity. Otherwise, it will just pass by. Yeah. Okay. For whatever reason, I see two Ramesh Bajaj. So Ramesh is something maybe signed up from two separate devices or whatever. Or maybe you cloned yourself.
Or it's a twin by the same name.
This might double the money that you're making. All right, who else do we have? Tom is there, usual stuff. I see Ajay. Ajay, is this your first time or you are returning to the meeting? I don't remember in recent times saying this name. Hi, Ajay. Oh, first timer. All right, so what brings you here? And you can unmute yourself. And what are you looking to get out of these sessions? All right, maybe a little shy. Let me see who else. We got Fred, Jennifer. J Jennifer, is this your first time?
Yes.
All right, so what brings you here? What are you interested in? What kind of an investor slash trader or maybe speculator? What do you do in market?
I've been kind of deep diving a little bit into stocks, but would like to um, expand my knowledge and also just with concern around the current economy, like diversifying.
Okay, cool. All right, welcome. You found us through what, Meetup, or did someone
Meetup.
okay, cool. Yeah, sometimes I get people who are like, hey, my friend attended this and he told me about the meeting. All right, Jose, Kamal, Matt, Niyanka, Pushkin, Ramesh, yes, SB. Probably don't recall seeing this name earlier. Again, the same question. If you're first timer, maybe you want to introduce yourself and let us know why you're here.
Yeah, hi. My name is Suzanne. You and I have met through another meetup recently, and I wanted to come today to find out what the group was all about.
Okay, with your voice, that's my voice sound familiar. Was that the
Yeah,
AI
Thursday.
meetup? Was that the AI meetup?
Yes, yes,
Okay, I got it.
exactly. Yeah,
Okay.
yeah.
The world is small.
Very small.
Yeah, yeah. Cool. Welcome, Suzanne.
Thank you.
All right. Who else I'm seeing here for the first time? We just get warmed up. Some, people join, they take 5, 10 minutes, and that's okay. Let me see who else is there. Tam, Tam, you've been here before? Is this your first time? All right, maybe we have okay. Oh, been here before. Sorry, then I probably missed you earlier, or maybe you joined in after I was, done with first few minutes of trying to look who been here and trying to get introductions. Maybe if you can introduce yourself, what are you interested in? What kind of an investor, trader, or, whatever. Well, what brings you here? New and just learning. Cool. And maybe I'll go with one more new name I see. Eva, is this your first time or been here before? Maybe if you can introduce yourself.
Hi, yes, it is. Just I saw it and I thought I'd just join and see what it's all about. But yeah, the same as Tom. Newbie here and here to just see what I can learn from the group.
Cool. All right. Okay, so let's get going. What a week it has been. Um, there's never a dull day with this new administration. So that's I would say. But let me share my screen and then we'll get started. Meanwhile, anyone else, if you have any thoughts, what did you find exciting? What topics interest you? Maybe put in a chat, and we'll see if we can. If you have a time, we'll address all of them. Meanwhile, I'll share my screen, make sure I'm sharing the right one. Uh,
I'm waiting to hear your thoughts about gold, silver, and oil, crude oil.
I'm not a big commodities guy. I think I see Jose here. He probably have more thoughts, but I went through, I saw one article around what might have caused silver crash. There was some unusual stuff that has happened, and I do want to cover that. So, yes, I do have some thoughts, but hey, I'm not a big into on the commodity side.
Sounds good. I'll be waiting for your
But
answers.
we'll touch upon this topic. I'm hoping some other folks can add more value to that. All right. Okay. Let me. Yeah, pronounce a new Fed chair. Yes, that is on my list. Gonna talk about Fed chair once we start our meeting at the higher level, macro level. Okay. You guys are seeing the screen? Which screen? Are you seeing the document or something else?
No, the discussion number 310.
All right. So then I'm sharing the right screen. That's a problem when you have multiple monitors, right? On trading, you lose more. You have 2x the monitors, you lose twice the money, and then I sometimes on a meeting I keep on sharing the wrong screen. All right, so I think we're all set. We got 22 people in here. Others will join when they'll join. So let's get started. Let me get my final sip of coffee, and then we'll get started. All right, welcome everyone to our discussion number 310. Almost 6 years of every weekend discussions around investing, getting our brains ragged on what's happening in the markets, and try to be a better investor, right? Again, for those who are new, I'm just a retail DIY investor, being investing in markets, especially US markets, for almost 12 years. And out of those 12, first 3 4 years were completely passive. Became active for using options, etc., since 2016, and then over the last 6 years got deeper into studying a lot of individual companies, etc. 2023, I thought I probably have can pay my bills using through my investing income, and became so far financially independent. That doesn't mean I don't have to work anymore. I probably work more hours than what I used to work in my corporate job. But as she would say, right, if you enjoy your work, then it is not really a work, which is true. I spend 12, 16 hours a day, but I love what I do in terms of analyzing companies and focus on investing. So call, like Warren Buffett will call it, right? Tap dancing to work. That's exactly what I enjoy doing. And my best thing is my commute is like 2 minutes from bedroom to my desk, which I love. I don't want to travel in Bay Area traffic. Anyway, that's my introduction. During my previous life in corporate, I was I spent most of my life on technology industry. During the start of a career, I also worked in a steel plant. Working in front of a 2000-degree centigrade blast furnace. Worked in steel plant consulting, and then moved to the on the tech side, and that's been my journey. Okay. From my investing perspective or trading perspective, my I am mostly I've changed as an investor as I learned more about myself and more about market. But I think now what I have been working out for me is a focus on buying great businesses and just figure out how to hold them as long as the businesses stay great, right? And don't get called out, don't get chickened out of those businesses just because the markets is doing crazy stuff. And this week was one of those weeks, right? So my focus is mostly on buying great businesses and hold them forever, possibly. And I find options helping me in terms of reducing my risk, and that's how I use options. I don't do zero DTE. I'm not a. I don't do day trading. I trade daily, but I don't do day trading, right? Okay. So in today's discussion, some of the things that I wanted to cover was, of course, we are now in earnings season. Like I mentioned last week, next few weeks we will focus on some of the earnings coming out from companies, and then I think the topic du jour, which some of you also mentioned, is let's talk about what happened in the gold, silver, why metals were melting down, and of course, start with the macro. We got a new Fed chair. We got a FOM. We had FOMC meeting, and yeah, I don't think I have any other charts. But today it's the first meeting after the trading had closed for the month. So I will also share, give you a peek into my portfolio. If you have any questions, feel free to ask. Otherwise, I'll share that again at the end of February, right? So that's how we run these. And then at the end of my long spiel, you and the discussion will open it up for breakout rooms. And then I see a question, right? Shen is asking, looking to get tips on how to become a pattern day trader. I'm not a day trader, but we have some in our group who may be. So feel free to have that discussion during the breakout rooms. And, you know, I can't help you in becoming day trader because I'm not the one. Uh, Anar is asking thoughts on Microsoft could be topic interested in everyone's opinion. Yeah, so let's discuss when I discuss the Microsoft earnings. We can talk about yeah, I'm also interested in what others think about Microsoft. I'll give you my opinion and we can have the discussion on Microsoft. We'll cover it during the earnings. So I plan to cover Microsoft, Meta, Tesla, Apple, and I forgot to put a logo of another company, which is the most important company in the world. Which one is that? It reported earnings. Some of you, those who have been long timers there, should know it. Come on, don't be shy. I'll give you 2 minutes. Yes, Niyanka, you got it. That's ASML. So I will also cover ASML's earning. All right, let's get started, guys. And anything that we discuss here is only for education. So please don't go and trade based on what you hear in this meeting, right? We will talk about a lot of our companies. We'll give our own ideas, but then those ideas probably work for me, may not work for you. Things that I've figured out over from investing perspective is it has to be tailored to your specific needs. Same stock, some made money, others lost it. It's just because their needs were different, their time horizons were different, right? With that disclaimer out, let's start. I always want to start the session with some thoughts for investing, some food for mind. And I think today what I want to talk about is some of the emotions that were dominant, at least for me this week. And maybe that could be true of others also, were fear and anxiety, greed and excitement, and herd mentality, right? Fear and anxiety coming from when you're looking at Microsoft, a reaction of market to Microsoft. Like Microsoft was down 12% at some point of a time. I think it recovered a bit, maybe then it closed at whatever point, right? And it is one of my top 10 positions. So when that position is down 10%, you do get worried about it. And I was going through those same emotions on Microsoft. Greed and excitement came in when you're looking at your Meta position, and that was like up. And then also I think overall anxiety on the market on what was happening during the whole uh, when did I think it was a Friday, right? We had that meltdown, or was it Thursday? Maybe it's Friday. The meltdown on the metals, and that's where I also got caught up into little of a herd mentality around, is it a good buy? Maybe I should pick some silver. Maybe I should pick some gold because silver was down 30%. And I talked about earlier in terms of that seems too good to be true. The curve was parabolic on silver. But yeah, there were some reasons, and we will talk about it. But damn. And then I think it was on Friday, I said, I need to get away from my from my desk before I do any stupid thing because the market has been so volatile, given a lot of things that all happened together. We got a Fed nomination and then the market doing crazy stuff. Some of you may be better in terms of emotionally, in terms of around investing. But if you're not, if you're like me and you get a little excited or get a little anxious, there are better things to do in life. Just get away. And that's what I did. I'm like, hey, I need to step away from computer before I do anything stupid and let the market do its thing. Doesn't really matter. In a year later, we won't be talking about these things, right? The metals meltdown. We had a similar moments in 2025 DeepSeek moment in January, or was it early February? So we don't even remember. But remember the craziness in the market? We had Japanese yen carry trade blew up. Yeah, who cares? Just that you don't. I just don't want to do any stupid mistakes just because market did something today. I'm interested. Which topics drove some of these emotions among you? Anyone wants to share? How was it this week? Or maybe you've probably gone through multiple emotions because the market was so volatile. And specifically depends on which companies you held in your portfolio. What did you go through? And investing is emotional journey, guys. It's not, as much as it is charts and patterns and discounted cash flows and the numbers, it's way more emotional than what we think. So I'm interested to hear what emotions did you get through this week?
I just wanted to talk about the silver thing. So I was in a trade with a silver miner, and I actually got out on Monday. So I mean, I think we were kind of already headed towards a little bit of a peak, but I don't think anybody expected the pullback to be that deep. But all that being said, like I mean, if you zoom out long term, like I don't think that precious metals are done, because they were going up in reaction to the Fed lowering rates and printing and QE and all this stuff, and we're not done with that, right? That's assuming unless there's some sort of catastrophe and they can't cut rates, like inflation goes up. But like the premise right now is that later on in the year with the new Fed chair they're going to cut. So
Yeah.
I think as long as that stuff is on, then you're going to see precious metals go up. I don't think gold has the volatility of silver, so I think gold should grind up. If anything, it might go sideways for a little while, but like again, like I think everyone calling for a crash is overreacting.
Hey,
Yeah.
Jose, what do you think sparked off this downturn in
Yeah.
golds and
Wait, wait,
I
wait, wait.
mean, yeah.
oh, he's
Just
gonna
one
talk
second.
about it. Okay, we'll
Yeah,
wait.
we'll talk about it in terms of silver crash. Then
But
I'm
yeah,
very interested in Jose's opinion, but let's wait for the
but
topic.
yeah, just in terms of like emotion, I kind of saw it coming and got out. I mean, I was doing some shorter term stuff, but like even the shorter term position I took, like I was only down 10% on the miners, so the miners didn't crash either.
Mm.
So this is a very like I don't know. I think anybody that's panicking, you may be overreacting. Like
Yeah. So
One
yeah,
thing I want to talk about the dominant emotions that you're talking about. If you do not have any emotions, then you will be successful in your trading altogether.
yeah, but
That's
we are humans.
my 2 cents worth.
Yeah.
No, that's actually
Patience.
documented in the Market Wizards book. Basically, you have to be ice cold in every step of the way while training.
Easier said than done.
That's true. That's true.
Yeah, been trying for years. You know, that's what I realized, that I need to work on my mentality and my emotions more than trying to work on, okay, which company is great. So I see Aditya says PayPal keep dropping lower. Yeah, because I think we are still a little concerned around consumer being tight, consumer spending being tight, and PayPal basically makes money if you spend. So I think that's one reason. And the number two is all software or SaaS companies have been kind of given up for debt. Uh, and I don't have the report just yet to discuss today. But if you look at overall SaaS companies, which includes your CRM, includes your Adobe, includes Twilio, includes um, ServiceNow. They're all trading at much lower valuation than what they used to be, because I think market is thinking that this agentic AI will eat their business, or vibe coding will eat their business. I don't subscribe to it. I talked about it last week, and I'm starting building positions in some of the ATI which own this software as a SaaS businesses. But Aditya, PayPal is in tough business. Payments is a dog eat dog world. It's
Yeah.
very competitive business. That's that's PayPal industry specific. On top of it, if you feel, if you look at, hey, consumer not spending, I think the recent consumer sentiment report wasn't that great, then it's difficult for PayPal to recover. But having said that, it has moved into a mature business stage, so I don't expect any more lot of a growth, even though the new CEO has been trying hard to grow the company. In my thesis around this is, hey, it's continue to do what it is doing, will probably grow in mid single digits, but and manages margins as it has been, and is a good cash flow generator. It's been buying back shares, and from that perspective still continue to give us value. So don't expect more fireworks, but it's a right now it's a classical value play now.
Do you think they have any distribution advantages? So beyond the tech scope, do you think,
In
because
terms of what?
I mean, they're plugged into eBay, right? Just showing up as a default option. I could create a new payments processor tomorrow, vibe code it, whatever. But being plugged into eBay, being plugged into all these portals and showing up as a payment option, that, to my mind, part of me, I was just thinking that
Yeah, I mean,
must have some
yeah,
advantage.
it is a dominant player, but now other players are also trying to get into the
Yeah,
same space, right? Again, this space itself is very competitive, right? And
yeah,
and PayPal can only work the best if the business itself is high margin business. But if you look at it, the same is the case with Adyen, right? So I bought Adyen, I think 2 or 3 weeks, not weeks, 2 or 3 years ago, maybe 2023 or 2024 when I talked about it, because it's a crazy growth. When they moved to US, I'm like, maybe I should have them. But then again, it's a very competitive space. It's a fight for the fraction of pennies. So I'm not expecting, and then that's why I then reduced my position, I exited my position on Adyen, because I already hold PayPal. But I'm not expecting too many fireworks from PayPal. But given the fact that the price at which it's trading right now, it's a value play if you don't hold it already in your portfolio. I already hold it, so I don't intend to add it. Okay. Christine said, I'm very disappointed. Also, CRM. CRM is in the same space of other SaaS companies. And collectively, the SaaS companies are trading at like 4x the times of sales. And I think from a PE perspective, maybe 10 or 11, which is like 50% of their average PE that they have been trading over for last 10 years. Market has kind of considered that these SaaS companies are dead, right? Now, those are the emotions that market as collectively also go through it, right? 2022, we punished Facebook as thinking that it was dead, came back, right? I'm not sure which companies will come back. Which companies' lunch will be eaten by the generative AI tools. Do we still need to have those Photoshop, seats if I can use Nano Banana to create it? And again, I'm not that from industry. Someone who's a creative illustrator probably can tell why they will still continue to pay for Photoshop and not use some of the generative AI tools to do what, in their regular job. Collectively, marketing, these companies are very, very tough jobs, right? Look at service now. It loved it now with all these agentic AI and the fact that even if I'm working and if I have to create a software, I can use all these great creating software creating tools and can spin up a software or an app in no time. I mean, I think last week we talked about, damn, journalists are creating app, right? So, and it always happen. Market swings. It's the way as a pendulum to one extreme to another, right? And you just got to be patient. If you still think that I don't know specific how to say around, but collectively the whole SaaS business has been given up for dead in the market. Right. And I think Chamath Palihapitiya said this week that you should assume in your valuation for the SaaS companies that the RPO is zero. Sometimes maybe I feel that maybe have we reached the bottom where they say that consider all the RPO, which is remaining performance obligations, means that the contracts that they have signed, but they have yet to deliver the services to recognize the revenue. They say you should consider that as zero, because he means to say that, hey, come on, these other tools will replace this, so you will never gonna be able to recognize the revenue. But the idea is the sentiments are very negative around all these companies, and probably I think it's an overreaction, but it's almost impossible to time the market. So if you may dip your toe in it and then you realize, oh my God, it is, it is still going down. So you need to have that patience. Jose says you need to have emotion, just don't overreact to them. Yeah, we are human beings. We will always have emotions. Otherwise, we will become machines. But the idea is keep your emotions and investing separate. Just don't mix that, right? Like we don't mix drink and drive. We shouldn't mix drink and drive. Have a drink separately, then drive, right? And the same thing is with investing and emotions. Christine, don't get me started on Adobe. Uh, I am a manager and maybe account manager, and I'm seeing more and more big corporates switching to AEM, and yet they're not doing well. Sorry, Christian, can you help explain what is AEM? Okay, Adobe Experience Manager. Yeah, okay. And they're not doing well. See? All right, so Jose talked about PayPal.
You hear me?
Yeah.
Okay, so DAM is digital asset manager. So the whole field that best example is a museum or a library, and they have a librarian who studied library science, computer information systems. And so companies are starting new departments. They slot them in wherever to handle all of their digital assets, everything from photography to video to ads that they use, and anything in digital format that has to be set up like a library so you can find things. That's what digital asset management is. And so these large companies, like for example, Disney, I just recently applied for a job with them, which I didn't get, unfortunately, but they were switching to Adobe Experience Manager. And Adobe Experience Manager is for all intents and purposes, it is a SaaS because it is delivered by Adobe, but it's for very, very, very large corporations. And it's a digital asset management system. And I'm finding in a lot of my interviews that they're all switching to it. So these large companies are investing like millions of dollars into switching to their whole digital asset management system to AEM, which is owned by Adobe. So I don't know how big of a share that is in their market. Yes, and I'm also a photographer, so I initially invested because I'm like, well, everybody uses Photoshop and Lightroom, and I certainly do, and it's hard to get out of that because once you start, there are no good alternatives on the market. And so, but I've just watched it drop, 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 drop. I mean,
Yeah,
like when
but
I
the
it was at
numbers don't
485
show
when I
up.
put it in, you know?
So numbers don't show up. If you look at last 3, 4 years, their growth has actually slowed down. So I don't know if even if the companies are switching to AEM, probably they don't have enough of a pricing power to command premium. Because looking at after 2020, after COVID, like 2021, they moved from a mid, early, low 20s to now 10% growth, 11% growth. So maybe they are discounting their products to get and to increase the logos and get these big companies in because
Okay.
maybe there are better competitive products out there, and that's why maybe again I've never owned Adobe and never looked into the details of finances, etc. But I just pulled in because you talked about how a lot of companies are switching, but looks like they don't have a pricing power.
Yeah, so I have to just preface this. This is my first meeting here.
Sure.
I'm still kind of like you know, a, a stock investment beginner. I haven't really delved into like this stock analysis that you just pulled up and looked at the growth. Um, I'm not at that stage yet where I can evaluate stock like that. I am.
No, 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 no. I mean, don't even expect, but I really liked your input in terms of how the real companies are. And that's why I pulled in. I'm like, wow, I didn't think that Adobe is so strong. But I'm just trying to gel what's the reality is and maybe how it is translating into financials. Both things could be true. Maybe a lot of companies are switching, but the other thing is maybe because, hey, if they are still the best, like you're saying, there's no alternative, but then they are under attack from, we had like Figma, which they tried to buy and then didn't go through it, and then we had a Canvas and maybe some other new tools which now kids are just vibe coding those tools. So anyway, and thank you for sharing your perspective on what you are seeing in the real world. And this is what I love because I've never used the product. uh, I never, and even on my corporate light, I didn't have to deal anything on Adobe except the Adobe. Only product that I love is the PDF Acrobat Reader, which is free. Beyond that, I haven't used any other Adobe products.
Yeah, yeah. I mean, I'm still learning about yeah, how to make investment choices, which is why I'm here. I've just taught myself a lot of stuff just by looking at different things, but I don't really know how to read an earnings report yet, balance sheets. So what you're looking at, this Adobe income statement that you have up on the screen.
Yeah.
I haven't done stuff like that. I mean, I do like to read, summaries. I have an account with Robinhood and it often takes you to different places to read evaluations. But that's about all I am. So I'm picking stuff. If I do individual stocks, I'm picking them because either I have direct experience with them and I have an intuitive feel about it, but not because I've done like an in-depth
So
stockbroker analysis.
so that's what Peter Lynch says. Stay to the area that you have an experience with. But I think, now we also need to know sometimes the things that are great products may not turn out to be the great businesses.
Yeah.
But things that have changed lives, airline industry, auto industry, horrible as an investment. But can you imagine? We as an investor can't imagine our life without airlines. They have changed. They probably have spawned. They have a huge share in increasing the overall world GDP because they made travel so easy. But horrible, horrible as an investment. So I think that's what we have to guard for.
Yeah.
Anyway, thank you for your thoughts.
Thank
Okay,
you.
want to move on? And Jose, thank you on, yeah, you got some lot more inputs on why Adobe is being challenged. Last week we were talking about SPY, SPYM, and I'm not going to go through the article, but I did find some information. So basically, I'll give you just an overview of. I think some of you mentioned that SPY. The reason why I switched from SPY to SPYM in my kids' account was because of SPYM has 0.02% expense ratio, whereas SPY had 0.09%. You might be wondering why I'm nitpicking into 0.07% stuff. Come on, it's such a small stuff. It really doesn't matter. But I'm talking about for my kids who's gone, and I'm looking at, let's say, if you stay invested till 80 years of age, that 0.07% made a difference of $1 million. And I think I did tweet about it saying, easiest $1 million earned today. Took me 5 minutes to switch investments from SPY to SPYM. Some of you also pointed out that SPYM has a wider bid-ask spread, which is true because it is less liquid than SPY. So I did find an article and I will share the link here if you're interested. The gist of this article is if you are just buy and hold, you're not trading, then SPYM works out better. But if you are trading more, then SPY works out better. So they also have run the comparison of in terms of depending on how much you trade versus how long you buy and hold. And they ran this article shares that how the overall pricing, because all we are concerned about is total return, which means you net of fee. And for buy and hold, SPYM works out better. But if you're trading, then SPY will work out better because you get a better fails. The beta spread is tightened in terms of percentage of the unit, percentage of the ticker price. So there is then I realized if that's the case, then I think I'm gonna hold SPYM for on the retirement account for my kid because hey, there is no trading anyway. It's just buy and hold. Since less than Vanguard 0.03%, yes, it is less than Vanguard's WU. And that's amazing one, right? And from a return perspective, it mirrors the SPY return. And if you want to get details, just go through this article. I find this very informative, and I knew that there were some questions around why did I switch, so I thought I'll share. Either be technical or or fundamental trader slash investor, don't be a news trader. Absolutely right. Don't be a news trader. Don't be the one who just heard someone on a podcast or you heard someone on these weekend meetings, right? And then you went and traded behalf on that. Don't do that mistake. Sorry, so what do you mean by our kids account? What kind of account? How old are they? All right. I started my kids' Roth IRA account when they got their first uh, paycheck because they did some part-time jobs during the high school, right? And I put every money in there. So, which is, what, they can do those jobs when they are 18, 16. Some jobs allow you to do on 16. And then one went to college. Whatever part-time income she earned while she was working in college, everything went into Roth 401k, right? So now if I project that out for up to 80 years and I use, let's say, 10% return on SPY, 10 or 12%, I don't know. I ran that simulation. This 0.07% actually makes a difference of almost $1 million. It was like $998,000, right? So I'm like, wow, that's an easy $1 million decision. uh, it was Roth IRA for my kid. All right. Right. And imagine to earn the same $1 million, if you're on your job, now you can put in how many number of hours you need to work to increase your portfolio by $1 million. So these expenses do add up over a long period of time when the compounding really, really hurts us, in the negative way on the expenses side. On the positive side, if you have a 40 years horizon, and you can make either 2% more or 1% more, and that is why I am kind of I hate paying 2% advisor fee, etc. because that 2% can make a millions of dollars of difference if you're looking at 20-year, 40-year, 50-year time horizon. Okay, looking at the macro side, what happens in this week in the market? Fed took a pause. I don't think anyone is surprised by that. We had a FOMC meeting as always. Most of the time it is uneventful. We have more fun during the press conference, which is after FOMC meeting, where I think every analyst is looking at did Powell take a pause? Did he take a deep breath? Did he flinch his eyes or whatever? Trying to get some signals and cue. But what I love about Jerome Powell is he's always repeating the same stuff, which he has been saying in every press conference. So I don't even know why we do these press conferences. But yeah, Fed has become a lot more vocal than what it used to be. And this is what the market likes about it. Nothing unusual. Market expected. We had almost 97 probability that percent probability that Fed is not gonna that Fed will basically keep the rate same. That's exactly what they did. So no change from that perspective. Inflation numbers are still above 2%, but pretty moderated, right? Now, depending on our own individual, I don't think like inflation is moderated and below 2% because we still pay more for the stuff, but this is how the government calculates, and there are some people who say we shouldn't believe this government data. It is what it is, and a lot of markets move based on this government data, so I will focus on that one. If you want to look at a trueflation, which is basically a lot more I would say contemporary data, a lot more they look at a few million data points to come up and find out what's the current inflation is, and not use like government uses homeowners equivalent of rent and stuff like that, and they look at a specific basket because that's how it's been done traditionally and it is very difficult to change what government do, so they stay with it. Some people want to look at trueflation. If you want to follow that, you can look at trueflation data also, but I'll still follow what the rest of the market and the government numbers come out to be. And so it's a still about 2%, but that's one reason why if you're not gonna get inflation, that probably we're not gonna get a rate hike. So the fact that the inflation is moderated, we you know we may get a rate cut. We'll talk about it. Right now, the market is not pricing in any probability of rate cut, but let me also see if what the probability Fed watch tool is. Let's look at the probabilities. Yep. Even on, we don't even expect even on March. We probably are expecting maybe the rate cut in June. Wow. 50%. So I think market is expecting maybe a rate cut in June. So nothing gonna happen for next 5 months, I guess, or 4 months. At least right now, that's the probability. These things could change and will change, but that's what the market is currently expecting. Right? No more rate cuts. We got a new Fed chair. Didn't get a chair, but we got a nomination for the chair, which is Mr. Kevin Walsh. The other Kevin Hassett, which was also has been in lead for some time until I think DJT came and told you, oh my God, you could look so good on TV. And he's the National Economic Commission chair. And so you look so good on TV, you talk so positive about me, maybe you should stay there. And then I think for a week we thought Rick Reader, the BlackRock vice chairman, he was in the lead. Poly market and some of these prediction markets they upped the chances of Rick Reader, but finally president came and told who he has in mind, and now we know, market knows that this uncertainty is over. At least we know who is going to be our next Fed chair, Mr. Kevin Walsh. But what is not over is which Kevin Walsh are we going to get, right? Are we gonna get the Kevin Walsh who was like pretty vocal about the independence of Fed? He in fact wrote an article around in 2010, an ode to independence, right? Why Fed should be independent, should not be buckling under, political pressures, and what Trump is known to do it, and he's a little more hawkish. So the market got a little concerned, or maybe he's not gonna cut rates. He's gonna just go with the data, right? And if the economy continue to boom and the labor market continue to stay strong, why need to cut rates? We grew GDP what almost 5%. The recent GDP growth numbers. Why you want to cut rates? We are already running hot. Why you want to make economy hotter, which will then can give rise to inflation? Is he gonna maintain the database decision, or is he gonna think about this is what president want me to do? So I don't know. Which one are we gonna get? Or are we gonna get the new Fed chair who's been now very proponent of Trump policies and critical of Fed? So he has changed his views over. All I want to say is he has changed his views over last 10, 15 years. The market is still deciding which Kevin Walsh will we see. So he's been more supportive of rate cuts recently and very critical of Powell, because he said we're gonna get into higher productivity and with all this AI and whatever the way Fed calculates, which is true. Fed calculates these numbers looking into rear view mirror, and they say, hey, that approach is all outdated. Maybe he'll come and rationalize Fed. He'll fire some of those PhDs, economists, saying, hey, all your models are so old, so outdated, doesn't work anymore. We should change our forecasting method. Maybe why we need to look at 2% as a inflation number. Where did this 2% came from, as that this 2% is good as an inflation number? Does anyone know? Why is Fed stuck with 2%? Or
Arbitrary.
not just our Fed. Sorry, go ahead, Sri.
Arbitrary.
Not really, but yeah, arbitrary. So there was way back, this came from New Zealand. Historical decision. Yeah, this came from many decades ago from a New Zealand Fed, where they were discussing around what should be an inflation number that we should focus on. And I think someone blurted out, how about 2%? And then we stuck with 2%. All central bankers started looking at 2%, right? And then it becomes history. And then it becomes, hey, why change something if it is not broken? And so the idea is maybe he's a little more forward looking and say, come on, we need to rationalize Fed. And he has talked about rationalizing Fed. And that is why Trump picked him. So
Well,
a little confused. So go ahead.
so I was just going to say is, you could pick any arbitrary number, 2, 10, 20. It's really in relative to everything else, right? If you've got a bigger number, your pay has to be bigger jumps because your expenses are, so it's I think relative number rather than a fixed one, because it will affect.
The real reason it started was,
Sorry, go ahead.
so I guess the real reason all this fixation on a number like 2 started was because we had the great financial crisis. Coming out of that, Bernanke essentially brought in his PhD thesis that he's going to flood the system with cash. So they had to artificially lower the rates, and they had to decide how far to go. So, they brought it down to like 2%. And so starting from 2013, the economy was humming and growing, and they were thinking, oh, it's because of its own economy's intrinsic power. No, it was the damn zero interest rate policy they had, which was too low at fixation on 2%. They should never have fixated on that. And even at this moment, I think the J. Powell has learned that lesson, that they should not kind of like preemptively, lower rates. And inflation may be just around the corner. It could be like that Fed guy named Burns, who was in the 1970s. Yeah.
He doesn't want to be Burns. I mean, very clearly, like Jerome, like I want to go out as a legacy and not to be remembered as, I think, Chris Burns or whatever his name was. But I also heard that 2% because again there are different theses around 2%. This New Zealand was one, and another one was maybe because the world the population grows by 2%, so I think it's okay to have a 2% on inflation. Again, these are the historical number. We don't
Ideally,
know,
it should be
but
4% because the 100-year average mean is 4% for the United States. 100-year average.
so the whole idea is, I think market is still a little confused. And this is what I was when I was reading through. Is like, which Kevin Walsh will it be? Will it be independent Kevin Walsh? Will it be the Kevin Walsh who has now changed and will buckle under Trump says, "Hey, I want 1% interest rate," and he'll give in and cave in and basically reduce the interest rates, right? So I think the jury is still out there, and again he needs to be confirmed by Senate. And right now I think there is one Republican lawmaker who says unless he's going to block it until that whole Jerome Powell's indictment by Justice Department, all that stuff is taken care of. Anyway, we'll see. But that's what also caused the volatility in the market. Saying maybe we got a little hawkish guy who has been earlier critical of quantitative easing. So he's also in favor of reducing the balance sheet of Fed. They said Fed has got much bigger balance sheet, which is true. We were like $2 trillion, rode it up to $9 trillion during COVID, and then now we are maybe close to $6 trillion. Man, it's been months since we look at a Fed balance sheet, right? Let's look at that Fed. I even forgot what the search term was. Let's say Fed balance sheet. Yeah, what are we looking at? Wow, probably this was COVID. Just post COVID and now we're looking at $6.5 trillion. They have reduced it. Right? But we were like less than $1 trillion. This was the jump during the financial crisis when Fed loaded up, what Rajiv was mentioning. And look at that. Since then, boom, boom. Now we are reducing it. So he is in favor of reducing the Fed balance sheet. And that's what I think the market thought is a little more hawkish. And then the dollar became stronger. And then when dollar becomes stronger, a lot of other things. And this is one of also reason why might have contributed a little bit to the meltdown in metals. Okay. Ashwin, I need to put you on mute. Okay, so we look into that. How about overall sector performance? Despite what happened on Friday, we are still fine, like 1.37% S&P 500. Energy has been crazy. 15% year to date. Wow. I didn't think that. That's why my XLE triangle is on is challenged on the call side. But ooh, and I think that's all has to do with Venezuela because energy prices have come down. I'm just looking at
The stock
XLE.
market in general has started to broaden out in the last few weeks. I wasn't expecting it. I think it will go back to being concentrated in tech.
No, I think it's a good news that the market has broadened out. It's not driven by those Max 7, but it's driven by a lot of this 493. And you think it's gonna get concentrated again?
Yeah, because I don't think the underlying earnings will be there in the, 3 or 495 stocks of the S&P.
Question is, if market is generally forward looking, and if we're thinking that we're gonna get a rate cuts, which will be good for a lot of these companies which are in, the financials and the energy sector, etc.
Well, I've been saying for 2 years, and I think I pasted the picture of the shape of the yield curve. There's no way in hell you're going to get rate cuts.
Okay.
Essentially, we'll be just performing as an economy as the last 2 years, which is what they call Goldilocks, neither
I
too hot,
love.
neither too cold. And that means you or the market participant will keep expecting there'll be cuts. But that's good because that will keep the stock prices up, but it'll not really rock the economy.
Yeah. Jose says some inflation is good. Yeah, there are some questions on why to even have the 2%. Why not zero? Like Japan. Japan has got 0% inflation, or sometimes they have a deflation. And I think I was hearing in some podcast where if you're a consumer in Japan, and if you go to shop and you see the change in the price, that has increased over past few years, you'll be surprised, you'll be shocked. Why did the price change? Because
Because
Japanese consumers have been conditioned with 0% inflation, and now what we saw, inflation coming in, and that's where the Japanese central banker increased the rates, and that's called whole JGB. The separately different story of meltdown on and the impact of JGBs on the rest of the markets, because the consumer got shocked. How come prices changed, right?
because 30 years they were in a deflationary environment.
Exactly.
It took them 30 years to come out of that. Can you imagine? Deflation is the biggest kind of like boo-boo for economists. They don't
Yeah.
want to get, you may have good smaller inflation or large inflation, but never get in deflation. No.
Yeah, never get deflation, never get deflation.
Because then the every person consumer will say, "Hey, I'm going to hold on to buy next because in 6 months it'll be cheaper," and everybody will be stuck in that economy. Nobody.
And worst thing is getting the stagflation, which is what each one every economist and hate.
I don't think the yield curve is saying we'll have any recession for 12 months. So
What
party on.
happened to the? I have not looked at yield curve for some time, so let me just bring
It's
up the
basically
yield curve.
steepened over the last several months or a whole year. Since January of 2025, it has steepened.
Yeah,
So
but
what is
we
the
that's where we
steepening
get
that
a
yield curve
we
show? It basically says, hey, banks go ahead and borrow or at low rates and lend at high rates. So the economic system keeps humming. I mean, you have to look at the change in the shape of the yield curve over the 12 months. So this will show you one shape today.
So doesn't when yield curve steepens, we are supposed to get a recession of 12 months. That's the yield curve. Steepening of yield curve has been the best indicator
You're right. I
of
think
all indicators to predict the recession.
yeah, so this you pulled up the right thing. It's basically the difference between the two long and the short rates.
Yeah.
And so the moment it goes or not, when it's negative is when it's heralding a recession. And the recession may come from 6 months to 18 months after the inversion happens, and it may never come. So it happened in 2000, but basically, I guess we don't have a possibility of a recession period.
Yeah. So maybe first time when yield curve has not been able to predict recession. And then we got all the sham indicator and all other stuff. And I think none of them worked out.
Well, one comment I would add with that is that maybe in a normal economy, if you take a look at the last 12 months, we've had two times where, markets are up like crazy because of comments from Trump. One was the tariff in April, I think, last year, and then the other one was tariffs with Denmark, Greenland a month or two ago, right? So my point being, while this might be normal, there could be unexpected things that come up that could have a huge impact, right? So,
But
Right.
that's on the
So basically,
market fact.
there are two levers to move the economy. One is the monetary stimulus or whatever, which is the yield curve and interest rates, right? And the second is the fiscal.
Fiscal.
And our man, Mr. Trump, he's like a gasoline on the fire with respect to fiscal. He basically created this whatever new beautiful bill, which is gonna fiscally spend the hell out of the country, and so that's why gold has rallied so much. I've been long gold for. I mean, it's gonna go even higher because America is not going to stop this binge on fiscal spending. Defense.
Which politician will take the risk? No one. Okay, let's reserve and today I have a hard stop at 12:15. I have to get out of the house because I have to drop my kid for a competition. She doesn't want to lose out, not no, don't want to be delayed in that competition. So, but we'll start a breakout round, and as always, I'll join from the phone. But let me let's continue some other discussions. Look at the crypto is completely gripped into fear, and we'll see. I think over the today morning I looked at it. Bitcoin is now below 80K, which I don't know. Someone who's a TA can tell us. Probably would have broken down some support levels and maybe heading lower. Who knows? Well, let's talk about what happened with silver, right? And I saw this chart on Twitter from Eric Balchunas, who is a Bloomberg analyst, ETF analyst. Seventh straight days of outflows for silver, which is $2.4 billion, which is second biggest drain on any ETF. Now this is despite that the silver has been up 64% to start the year. So while the silver has been going up, we saw 7 straight days of outflow, which is very different from normal phenomena. Normally, you will see that if the underlying is going higher, people will buy those ETFs. Okay, because I want to participate in the growth of that, right? But this was something very weird that was happening only with SLV. And then I asked to took help of some of our great AI tools to help me understand that what are the implications of this? Why would this happen? Why would someone be selling the ETF which holds silver while the silver has been going up, right? Few of the things. And again, so now probably I'm looking at Jose. You probably trade a lot more in this market, but I don't know. But let's say because there is a disparity between where the physical silver is being traded in China versus the paper silver, which is SLV, is a trust. It's just like GLD, and trust is supposed to hold physical silver to back it up. So there was a disparity between the prices of the physical silver versus the purported prices that you can infer from the value of SLV. So lot of sophisticated investors, they were actually selling the SLV and getting redemptions of the physical silver bars which is held in the fund's vaults. Why? Because the physical silver, then you can arbitrage it by selling it in China, where it was selling maybe 30% cheap or 30% higher, or maybe what some percent higher, right? And that's the reason why, despite that the V price was going up, there was a selling pressure coming from those who are still redeeming it because they want to buy, hold, get physical silver. There were also some concerns that maybe the fund has more digital or paper silver than the physical silver that was supposed to back up that paper. Again, I don't think, and we got like real confirmations, etc. From there, but that could be also one of the reason why then if I want to get a hand to a physical silver, I want to do it sooner, right? So that was a weird phenomena that why this was happening. And I think we all, was it last week meeting, somebody talked about what China is doing, and that's why the silver was going up, because China basically restricted the export of silver because they want to hold the silver for their own industrial use. And now with all the expansion of data centers and the solar panels, EVs, the demand for physical silver, right? I can't stuff the ETF paper or like say digital silver in it. You need a physical silver to build these for their industrial use. And when China restricted the export of the silver, the prices of silver start to go up. So that there was some paper versus physical from some of the folks who wanted to, it's called raiding the stash. So sophisticated big investor want to raid the stash to get their hands of physical silver. And somewhere it became from raiding the stash to rushing for the exit because, oh my God, they may not even have the silver. Everyone was trying, and there was a big article on this on a website which also talked about it. I forgot to put the link to that article, but and that's where it tried to explain why the heck 30% drop in silver, right? And that was one of the reasons where they were talking about why this has happened. And of course, because silver was up 64% to start the year, it was incredibly frothy. Structurally, it was already, a lot of retail FOMO came in. A lot of people were trying to just chase it. A lot of would have taken some leverage bets on it. And there are leverage ETFs that exist, leverage ETNs that exist to allow people take leverage bets. And any, these leverage works as far as it doesn't, right? So one crack we saw in silver, which could have been created by this structural, I would say, a deficiency or the unstable structure which was created by this lot of the difference between the value of the physical silver and at which the SLV and some of these futures were traded. We got a catalyst when Kevin Walsh was announced as the next Fed, and then all the metals start to go down, because if he's going to be a little more hawkish, then it means all the precious metal, because they don't earn anything. Dollar became stronger relatively to dollar. These metals were not that attractive, which probably would have caused some initial drop in it. And then, given that there were this structural, unusual stuff which was happening and brewing up in silver, it just cascaded. 30% drop was some 7 sigma or 6 sigma move that is not supposed to happen, but it did. So I don't know, I don't trade in this, but very interesting to see that there are so many. We really don't understand how the plumbing works behind the scene on this commodities market, and the shock can come from the areas that we have no idea about. I never thought about in terms of, because I was ignorant. I didn't know the prices of silver, physical silver, and the imputed prices of a paper silver were so different. Right? Anyway, thoughts from guys who actually trade this and have been in this, I would say, asset class. John say, how do you get physical silver from silver ETF? As an individual investor, I think we can. But I actually looked. I never looked into silver ETF, but I looked into GLD and its prospectus. If you hold GLD, you want to get a hand on a physical gold, you can actually request it. And institutions, they do it. There's a process to do it. I don't think as a retail investors you can. Maybe there's a minimum amount. But I looked at a GLD prospectus. There is a way in which you can redeem your GLD ETF and say, I want access to the physical gold. Probably SLV ETF also has a similar provision, but and that's why maybe there were some big traders, institution traders, who were reading the stash saying, let's get a physical silver. Maybe we'll ship it to China and take advantage of that arbitrage. Right. Uh, Again, someone who actually traded in this asset institution probably would know more. But
I mean, like,
I read that article, and then I also took help of this AI to help me understand what the heck had happened.
I think it's really hard to read all this institutional stuff because they could have multiple accounts, right? They could be doing arbitrage overseas and stuff. So I don't, it's hard. I mean, everyone knows that like the price of in Shanghai is way higher than the paper market or the COMEX or whatever. So I mean, that's a demand driver. I mean, potentially the China could just dump a bunch of silver. I don't think that the long term trend is over. So like I said, I got out because of technicals.
Yeah.
And I expected a drop. I expected we were going in our other group through seasonality for gold and silver, and like February is the worst month anyways. There's a seasonality effect, right? That's coming into play, and January is the best month. So like this happens often. Like this is it's part of the cycle. So I look at it from that perspective, and that's why I got out last Monday on my my silver miner thing. But again, like even my silver, I took another small like shorter term thing on when silver miners. It was only down 15%. So like silver may have gone down a great deal, but like the miners haven't. And I'm sure buyers will step in to at least give it a bounce. But I wouldn't be surprised if like the next few weeks it's down, just because overall market stuff. And the thing too is like gold and silver, they live off uncertainty, right? So I guess picking a Fed nominee is a reduction on uncertainty, right? So the next time Trump does something crazy, which shouldn't take too long, you know, probably these things will get a bounce because that's what they live off of, right? They live off chaos, and we're living in it right now. So I don't know. I mean, like I wouldn't be. I would be. I think it'd be totally normal if it was in a corrective mode for the month of February. Um, and if it goes past that, then yeah, then it's over. But I don't think it's over because, like I said, they're gonna print and all this other stuff.
Cool. All right, I see Sam, your hand is up. Yeah, go ahead.
I want to ask you about the Bitcoin. Um, if Bitcoin goes to zero,
Mhm.
yeah, right. But would the ETF traders get involved? Like in April of 2020, USO, the price of gas went to below zero. So then the USO went from being a passively run fund to an actively run fund.
Yeah, so I don't know if, what the IBIT do, but if Bitcoin goes to zero, then IBIT will go to zero. So I don't think it will go in negative because the reason why oil the ETF became negative because of, hey, they were actually willing to pay
Gas
buyers
contracts is negative.
oil because you have to take a physical delivery and there's a cost involved in holding that contract, right? In case of Bitcoin, there's almost no cost, no storage cost for it. So probably it will not go to, I mean, the futures won't go to negative, but yeah, if it goes to zero, it goes to zero. We lose all money.
So you don't think that there would, well, obviously there's heavy players in it, but these advanced pardon me, these fidelities wouldn't intervene because like USO changed things.
So I I don't know what Fidelity etc. gonna do in terms of becoming from passive to active. If they become active or not, I can't predict on that one. But if the underlying asset class goes to zero, yeah, it will go to zero and be ready for it. I mean, this has been a very volatile asset class. I don't think it will go to zero. Probably there will be some support area where the bears will kick in because they just want to speculate on it and will increase the price, but I don't know where that floor lies. Maybe we thought the floor is at 75 or somewhere, but I
Uh,
just before this meeting I took it, it's already at 78K.
yeah, I think it went to 12,000 during the pandemic.
Oh yeah, but that was pre-institution adoption, right? Now we got a Black Rocks of the world, and we got a lot of other institutions that have come into this market. So the markets are completely different. Right. So 80% drawdowns we have seen in this asset class a few times. I don't think 80% gonna happen, but 50%, sure. I mean, oil dropped, not oil, silver dropped 30% in a day. And we say, and gold dropped 10% in a day. I think platinum, palladium, a lot of other these precious metals, they were all down 15%. And we say that Bitcoin is volatile. Come on, give me a break, right?
Well, I think too, like, uh, if you look at the way Bitcoin works, it's kind of like silver and gold and stuff. It's like it's going to benefit when they're doing loose monetary policy. So I think as long as we're not in a restrictive period, then I don't think you have to be worried about a huge drop. Because like that's yeah, it's a risk asset.
But I think there are two reasons, right, why the Bitcoin price has gone down, at least the way I read the market. One is the Bitcoin is supposed to be the hedge against the dollar debasement, right? Hey, the government's going crazy in printing money and all that stuff, which is what they've been doing it. But we did not really see dollar debasement in terms of, hey, the gold show basically rose up as a hedge against the dollar debasement, right? So then it was come on. Now when over the last one almost for 18 months, I mean, central banks have been piling up on gold for now almost 2 years, right? If all the dollar debasement fear, if all the money has gone to gold and then to silver, these precious metals, then where is the theory of a dollar debasement that government gone out crazy and print money, and that's where the Bitcoin will be. So that really hasn't proven out. Again, I'm not writing it off, but that over the last 1 year hasn't proven out wherein we have Trump doing so many things, causing so much of a confusion in the overall world market, and only thing that was going up was gold and not Bitcoin. So number one. Number two, there's a concern around again the quantum, the advances in the quantum computing, and the fact that 30% of the bitcoins that have been mined, those are held in a wallets that you can't even upgrade to become quantum resistant. So even though Bitcoin community will come out to be create a quantum resistant protocol, will have a new wallets which will be quantum resistant. Again, there will be a lot of other threats. I'm not even getting into the threats to our other financial transactions, right? But everyone will upgrade to quantum resistant algorithms. The question on that is that there are almost 30% of the Bitcoin that are sitting in wallets which are so old, nothing has moved. Maybe the owners died. Maybe that's a Satoshi Nakamoto wallet wherein nothing is happening. Maybe he's dead. Who knows what that is? So there is no way that you can upgrade those wallets to become quantum resistant. The question is, if quantum computing infrastructure is available to the players who could then go ahead and hack those wallets, suddenly we see a gush of supply coming into, those basically, we thought those bitcoins have been lost out, has been taken out from circulation, maybe they'll come back. And so I think that's another one big concern, saying that quantum computing, the advances in quantum computing will break the encryption of Bitcoin. And if you follow the space, the overall community is kind of ossified. The community doesn't make too many changes to the protocol, right? And that's where a lot of advances that we are seeing in terms of usage of cryptography to do smart contracts, to do tokenizations. All those are happening on other blockchains, pick Ethereum, Solana, whatever, right? There are many others. Bitcoin has ossified itself as historical value, but that means if you have to make changes to become quantum resistant, oh my God, it's going to be Herculean task. It's going to be multi-year task. And right now, the community is not even started discussions on it. Some of the Bitcoin OGs who have been here in like 15, 10, 12 years in the community, they have been expressing, come on, guys, we need to think about it. So that's another concern which is causing investors to basically, a lot of OGs have dumped their tokens, their Bitcoin holdings. Maybe, what if it's get the quantum computing, we are not able to make it quantum resistant in time. So that's where we're seeing Bitcoin is been, these are the two big concerns around it, and it's been where it is. So since we talked about it, let me just pull up the current pricing. I mean, I took it just before this. Yeah. We're sitting at 78. It's been down 12% in last 7 days. Okay. Let's come back to the TradFi. Hopefully, anyone else sees anything else on why the Bitcoin is going down? These are my reading of these are the probably two reasons. Number one is the use case hasn't been validated in almost the perfect time of that use case. Number two is the concerns around quantum and protection against quantum computing for encryption. And AI trade to call the money gold and silver. Yeah, and the money has moved out because they find better place to. But that's more on those speculators will move their money from one asset class to another where they think, hey, for next 6 months, this is gonna do better than Bitcoin. Let me put the money in AI, put money in gold and silver. But I'm not even talking about those speculators. Even I'm talking about the ones who been in the space and they are concerned about these two things. All right, let's talk about earnings. Earnings has been in full swing, and for S&P, we are supposed to, for this Q4, maybe we're gonna get 10% year-over-year growth for the fourth quarter, which is great, right? And if we get a multiple expansion, that's even better, but 10%, nothing to worry about. I think earlier, before the earnings season started, the analyst, the overall expectations are around 8%. But now we even up the expectations because based on more news and how the other companies have already reported, now the expectations are around 10%, with the tech sector growing 25% year-over-year earnings. Now this is where this is what I'm more interested about, right? going all the way to 27 till 26, like 15%. So Q1, 10, 11%, 14%. Average it out, maybe we're looking at 15% growth, earnings growth in 2026. Rajiv was saying, right, recession is nowhere. Doesn't look to be. You won't be talking about this growth if you're talking about recession. We don't get this growth in recessionary periods.
We are very fortunate to live in an economic system which is characterized by exceptionalism.
Yeah,
Is that the
exactly.
thing that we are not talking political personalities, we are not talking loudmouth people, we're talking the way this economic system works is an exceptional place for you to put your capital today, not in any other country. Don't be thinking like, okay, just because emerging markets performed well last year, that you're gonna, they'll peak faster than this economy.
Yeah, but I mean, I still have diversified because we may be more volatile, etc. But oh, come on, this is a great, I mean, just from a business fundamentals perspective, right? I don't care that the market has, I do care. I mean, the market has returned 17%, including dividends last year. And over the last 3 years have been great, like 26%, 24%, 17%. And you might be wondering, how long can this continue? But come on, earnings still, market is still expecting earnings to be around 15% for 2026. So I'm still bullish about it.
Hey, quick question. Um, you mentioned emerging markets, but last year wasn't just emerging markets. It was also, like Europe and some of the other more advanced
Non-US markets, let's put it
markets.
there, non-ex-US markets.
Yeah.
IFA and EEM, both of them did well, yeah.
Yeah.
Yeah, so that's what I'm wondering is, you still got concerns about the dollar. It's been down quite a bit.
Well, that's the reason they primarily went up. So
The
a
other
large
reason,
component.
so I think the other reason, especially on the European side, is we basically told, hey guys, you need to spend a lot more money on your own protect, or
The
on your
defense
own
side of things.
defense side. So you saw the companies like Rheinmetall in Germany, and there are some other companies, all those defense, because Germany updates defense expenditure, a lot of those industrial companies stocks were doing all right. But yes, both IFA as well as EEM both had outperformed S&P last year, which has happened maybe after, because I've been hearing this developing growth story for as long as I've been investing in US markets,
So
but
what do
never
you think
worked
of the
out.
next 12 months for IFA and EM? Should be in there?
Who knows? We'll have to see. I have no idea about how EM and if I want to do, but I anyway want to have some geographical diversification. So I do own some stocks which are outside of USA. Okay, let's look at earnings. So we got a still hectic week ahead. I will be focused on these companies, and I will basically put out the earnings on my Twitter post like I always do on some of these. Palantir, retail favorite, PayPal, Uber, Google, Amazon, because I hold these companies in my portfolio. But here are the other ones, right? Still pretty busy week, starting with Walt Disney. And I'll give you a minute to look at this chart. What others are you interested in?
Hey, Vivek, a quick question. You think Microsoft with the 430, 426, is that a good time to buy? Because I want to hold it for 5 years at least, 4 to 5
We'll
years.
talk about Microsoft. Hold on. When I'm looking at the earnings this past week, we'll talk about Microsoft.
I'm very high on AMD.
Tyson.
AMD, high on AMD means you're bullish on AMD. You think these AMD
Yeah,
results will be
very,
great?
very bullish. So in relative terms, AMD is undervalued compared to, say, NVIDIA and other brethren.
So I actually met one of my ex-colleagues. I think it was last
I'm
year.
just talking valuation,
Yeah.
purely financial numbers. Yeah.
But doesn't it deserve to be? Because and he I don't want to dox him, but he's a little senior position on AMD, and we were talking, and then I told him what I do, but I say, come on, your AMD is growing crazy, but I don't see the margins in AMD. What the heck are you guys doing? And he say, yeah. So let me just pull AMD.
So several year forecasts is what underlie these numbers, and the growth prospects are much better than the pricing of the stock. And
But
I guess the news comes out from AMD in like intermittent basis. Like a few months ago, Lisa Su showed up and say OpenAI partnership, and boom, the stock rallies big. So that's my outlook.
yeah, so I agree. Give it to you in terms of a growth side, AMD may have a better growth story, but I also want to know what's after you cut down all your expenses, etc. That's what I'm not an employee, right? So I don't get to enjoy the growth of revenue. Because if you're growing your revenue, maybe you'll get a better salary. They'll up your salary. As a shareholder, I only get paid after everything is given back to employees, to your debtors, to government, etc. I don't see that in AMD. That's what kept me away from AMD. Look at their margins. Pretty pathetic. If these margins are like of a fab company, it's a fabless company.
Right. So now, can you look in for the growth prospects? So what you're showing is what happened in the past, right? Trailing 12 months or whatever. What is forecasted for the future by these kind of esteemed analysts who seem to
Let's look
know
at a
what the game is?
forecast. Let's look at an EPS forecasts. Right? We're looking at a it doesn't have what's they don't have a margin forecast. So you might have to
EPS
compare to
growth. EPS growth is like what, seven? No, 50, above
no,
64%,
EPS
64.
growth will be like, yeah, 64%, 57%, 36%,
Right.
right? Let me compare. I mean, I can get a better margins on a fab company like TSM, and that's what has kept me away. EPS growth on Nvidia is 64%, 30%. Then in 2029 it start to taper down. But look at the margins on this Nvidia, which is like blow up my mind, is saying, you know,
No, clearly,
60,
Nvidia is
60%.
very healthy financially, both looking backwards and forwards. No doubt about it. However, it's such a huge market cap
Agree.
company to move the needle there will be difficult
Yeah.
compared to AMD.
So if you're looking in terms of I want to from to play with the stock, maybe AMD. I just want to become AMD become better in terms of managing their margins. I just don't want like single digit operating margins company, right?
What do you think of ARM on my Wednesday? ARM.
Amazon Wednesday. Yeah, I never owned it. Maybe I
Okay.
should because they are like very low. They're like almost zero capital investment company, but I've not owned it. Again, I'm trying. For me personally, I'm trying to reduce adding more exposure to the AI related thematic companies because I already have it. I want to diversify it, so that's why I probably won't add any of our new tickers in my portfolio.
I also have iron and
Wow, you're in all those retail heavy
uh,
iron.
just just a small slice because and it went up quite a bit.
Yeah, yeah. If you're in iron, you should listen to. Probably you might have already listened to Jim Chanos.
Oh, okay.
There's a good podcast around because he's short on iron, and it's been always a good to see the fight between Mike Alfred, again one of a Twitter personality, and then Iron CEOs and Jim Chanos, how they exchange the barbs around why Jim Chanos think that it's a shady company when it comes to overall in a long-term perspective. There's a podcast on Jim Chanos where it talk in depth on iron. If you're an iron shareholder, maybe you should listen to that. I see JSA is looking Microsoft AMD's, yeah, they are distant cousin. It's a known fact that both of them are cousins. Uber, earning, Palantir, Amazon, Google. Yes, these four I am. And what else? Yeah, PayPal too. All right.
Coherent used to be very strong. Anybody have opinion on Coherent? It's basically an optical, kind of hooking up stuff on play.
I've never owned it. I don't think I've ever analyzed
Again, another
Coherent.
Silicon Valley company which was doing well in the 2000s, but then now those times have come back with respect to optical being in need. So anyway,
Yeah, no, I've never owned it, so I've no idea. But geez, I don't like their shareholder dilution, man. They're diluting us. Coherent. Not the margins are also not that great. Again, I think there are a lot of companies. They have a huge revenue growth because now AI demands X, Y, Z. We have a A lot of those old industrial companies are going through the roof because suddenly there is a need for storage, the need for memory. At the end of the day, I also want to look at if you're spending, if you are getting $100 from your customer, how much are you spending to get that $100? Or
Can
do
you
I
show
look
the
at
numbers for
in a
coherent that you're
future?
talking?
Sorry, go ahead.
Can you show the numbers that you're talking where you're saying dilution happening to coherent shareholder? Can you show that?
You're looking at 8% change or increase in share, 10%, 18%, 35%. It's been pretty random. It means, come on, guys, don't dilute me like that. Right? So you basically own less and less of a company. You have a less and less claim on the company. But they've been diluting like hell. I mean, Palantir had the same problem. I wanted to see them get low. It was one of a notorious company in terms of shareholder dilution, which they did. They did fix it. So I became more bullish on it. Right. But now the valuation is like, wow, through the roof. All right. So let's talk about some of earnings that we had this week. Then I'll quickly give you a peek onto what I bought and sold and the portfolio. And then we'll get into breakout rooms because I have to step out at 12:15. I don't want my kid to miss the competition just because Dad, you were still talking in your meeting. All right, let's look at Tesla, one of our retail favorites. I just reviewed Tesla today morning and put it on my. So I didn't find anything interesting in Tesla, but that's nothing new. If you analyze and look at a Tesla as a business over the last few quarters, it's been a pathetic business to own. That's why we always have a change in the stories around Tesla. First time we saw year over year revenue decreased. Right? Okay, come on, margins have always been bad, but now your revenue is also decreased. What the heck happened? Right? Operating income is down, operating margins all are down. Okay, even if you look at purely from operational perspective, non-GAAP numbers, even that's down in terms of oops, I should have edited saying net income is down 16%. Revenue down, operational net income down, your EPS down. Nothing great to look at from the current business of Tesla. But if you're a Tesla share owner, I am a Tesla share owner, you know our management is master in deflection, right? Don't look here, look there. Sun is shining bright. We're gonna move to the new world. And when I was reading through the earnings transcript, I didn't listen to the whole earnings call. I don't know, I got busy somewhere else. While I was reading through the earnings transcript, somehow I got a little feeling, Elon Musk even said we are redefining our mission. I think earlier that mission was related to energy. What's their new mission? Tesla shareholders, and I know some of you are Tesla shareholders. What's Tesla's new mission? It is amazing abundance. That gave me little hilly in terms of I've seen another founder giving similar nebulous mission statement. That was mission of its company, which was like raising the community, raising the consciousness of the world. Who was that? We talked about this company a few years ago. Does anyone recall who was that company which whose mission was? Yeah, Asif, you're right. Yeah, you've been a long timer in these meetings. Yes. So that gave a little, parallel around amazing abundance is the new mission statement of Tesla. They redefined their mission statement. Now, so what caused me concern around this quarter was that their volumes are declining. Forget about the revenue. You can claim that revenues are declining because we are under pricing pressure, but their volumes are also declined. The deliveries dropped, production declined, and then of course the revenue contracted. Cash flow is down 30% year over year. And then management is also talking about we're gonna burn $20 billion of cash. Now we got attuned to hearing hundreds of $1 billion of cash, so $20 billion doesn't seem to be much. But come on, as compared to what they burned in 2025, it's multiples times of it. It is because they want to spend money in putting some 6 different factories. So he's saying we're gonna spend $20 billion in capex. And they're basically betting the whole future of the company is on Optimus, on robot taxis, and you don't have to work. Robots will take care of everything. But if you go through earning transcript, already dropped hints of, without saying the words that, hey, we're gonna be delayed from our earlier plan. It's basically, it says a very much nicer way that, the S curve will be stretched out. Just generally doesn't talk about that. It'll take longer. You should add 5, 6 years anyway to his timelines, but now he himself is admitting that our earlier plan for Optimus, I think the S curve will now stretch out because there's no existing supply chain. We have to build everything around supply chain or on Optimus. So now beyond that, he also referred about maybe we'll manufacture our own chips. Come on, guys. I know some of you work in chip industry. I've been following this industry for some time. Chip manufacturing is not easy. You just can't come and say, you know what, maybe I'll manufacture chips. Maybe he'll do it. I mean, he's an amazing guy. I can't bet against him. But these are my concerns. They're not talking about maybe because we have a so constrained on a supply of chips, especially memory chips. Says maybe we'll build our own chips. Maybe we'll build our own solar cells as well because the supply chain is constrained, right? Which seems to be crazy thoughts. And this is not included in the $20 billion of capex. So you can assume what more money the Tesla will be burning for a future that is farther out than you might think, right? Because the current stuff is not working. And then they also thought we're gonna discontinue Model S and Model X. While some might view it as, look at the CEO, it's such a bold decision to look bet on future and is not afraid to cut down, some of the current products, because some might say, hey, why are you cutting down your revenue products to build for a future which is uncertain? But if you really dig into the detail, Model S and X are not selling anyway. They account for less than 3% of total revenue, right? So the good optics. No, what? I'm gonna take a bold decision. We're gonna invest or bet on Optimus, robotaxis. We're gonna cut down our S and X, and then focus on these new shiny stuff. Market likes to look in future, and Elon is master in showing you how bright the future is, right? So amazing abundance. We don't have to work. He didn't talk about universal basic income. He says, hey, universal basic income to pass it. I'm looking at universal high income. So read through the earning transcript, man. It's so much fun going through the earning transcript. It's unlike any other earning transcripts that I read. It's lot more hyperbole and lot more think about how the great future is going to be, and Tesla will be in the driver's seat of that. So it's been always loser's game. Like I said, it's to bet against Elon. I'm not going to bet against Elon, but I'm not rushing to buy the shares either. I want him to prove what he's saying. But these are some of the concerns. Now, earlier, 10 years ago, like, come on, we are the EV players. We are the best EVs. Future of EVs will be great. Nobody talking about EVs anymore. Nobody talking about Tesla cars anymore. Not in the earnings call, nor the numbers don't show up. Analysts don't ask much questions on EVs. Only questions are around robotaxis and Optimus and what are you doing. And maybe next time we'll talk about chips, manufacturing, and all other stuff. Right. So that's on Tesla. All right, any other questions on Tesla? Move on to the next one. All right. Yeah, we need to finish some of these earnings. Looking at Apple. Apple had an amazing quarter. Right. Beat on revenue, beat on EPS, both sides. Good $50 billion free cash flow. That's why it's difficult to bet against Apple, even if they are growing their revenue by only 4%. I mean, this time they grew like 15%, which is great. Uh, it's difficult to bet against a company which is generating $200 billion of free cash flow annualized. Imagine what you can do with the $200 billion, right? Uh, the best thing that I liked about Apple was China. China sales are up 38%. 38%. And this has been a thorn in Apple's business over the last few quarters because so much of competition against China. So last quarter, Tim did mention saying 2020, the fourth quarter of 2025 will be growth year for China. So I specifically, I had a, I listed down in my notes saying I need to check for the next quarter. And he delivered
What changed in the last quarter with China?
39% growth in China.
Now, what was the fundamental factor? Like, because these Chinese were not buying it, iPhones because it was cheaper all of a sudden, and it's not delivered anything fundamentally new.
No,
You know.
so I think there were two things which has happened in China because the China also started to become little better even in previous quarter. So if I recall correctly, and talked about the previous quarter also. So Chinese government earlier had they because the consumers in China are stressed out. They are not spending. So, and the government, time and again, I'm seeing it for last 2 years, government have been trying to encourage consumer to spend more. So they will give them subsidies if you go and buy electrical appliances, right? You can swap your old washing machine for a new, and the government will give you some subsidy, will help you in making that purchase. Government was also doing the same stuff for the cell phones, but that was only limited to a certain dollar value of the cell phones. And earlier Apple didn't want to participate in that because they have to basically reduce their average selling price, and it's also not great for brand. But I think it was the last quarter or quarter prior to that where Apple did participate in this rebate program, and he won't talk about it, but I think I read it in some newspapers, and then he realized, oh, it means now consumers in China can go and buy some Apple. I should see some growth in Apple in China. Now, I don't know if that accounts for 38% growth or that accounts some portion of a growth. The other thing is, Tim also talked about it, that the new model of phone is selling. People are crazy about the new models. Okay. Now, I have to believe what Tim says, but I think both the things could be possible. Saying some of the older, lower price models have been helped by the fact that now consumer can swap and switch to iPhone and get subsidy from the government to do that purchase. Because now Apple is participating in that, and the other one could be, hey, Apple did a refresh of new iPhone 17 model, and people want to buy it. Both.
Vivek, how much was that subsidy? Because when I got a subsidy in 2009, it was like 10%.
I have no idea. I mean, I don't know. I
Yeah,
have no
so
idea, but
okay, number two is the phone companies at the end of each model year, they're like one one half the price of the current model to get rid of it. That's where the discount comes in, not so much the subsidy. At least not with Apple products, according to my experience.
maybe again, I don't know the details. Only information that I have is from the earnings report and what I had earlier last few quarters read about in the markets. I don't have any foot on the ground research when it comes to China. But I mean, it shows up in the end results, right? So it's 38% growth. Okay, I did say it's a new record for iPhone. He says world loves iPhone, and I think they are what there are some, and he did cite some of the research, those market research reports saying Apple is number third or fourth, whatever it is, right? And this is one amazing, right? They continue to buy back their stocks like crazy. Even if the company don't grow, you own more and more of company because they buy back like crazy. According to some estimates, if you add up all the buyback that Apple has done, maybe it is approaching like $800 billion. Okay. So by doing nothing, your share in the company is increasing because they do a lot of tons of buybacks, right? And okay, they didn't provide any guidance during the in the earnings, so maybe after the earnings call they gave the guidance. So I think I've not updated with the guidance yet. But Apple's is back. I think there were some questions from a lot of questions came from analyst community around memory pricing, and that's why we didn't see the movement in the stock despite the turnaround in China. Why? Because I think the market is concerned about the margins on Apple because of the memory pricing, and almost every analyst asks questions around memory pricing, saying how you're going to manage your supply chain. The prices of the memory has been going higher and higher, and then how it impacts your margin. I think market is concerned about that. Tim talked about that they are seeing constraints in the supply chain when it comes to memory, right? So the market is still a little bit, come on. You have got a good growth, you have a demand, but if you can't fulfill the demand, then what good that demand is? Then you can't capture that growth. That's why the stock price didn't move. It moved barely, right? So I don't know where it ended on Friday, but given the result, I expected more movement. But
Uh,
market is a little concerned about whether they'll be able to capture the demand or not.
Vivek, it's only 15%. And the thing is, China government is putting Huawei phones, but Huawei phones are like crap. At least the iPhone looks nice and they're considered luxury items. I remember these poor people that earn maybe 3,000 RMB a month, right? Or 2,000. They save their salaries, and the only thing in their life is one iPhone.
Yeah, yeah. And
So
Tim
it's not
also,
the subsidies.
yeah, and Tim also talked about in terms of they're saying they opened I guess a new store in Mumbai. He talked about that they are bullish and for their business in India, right? So Apple is moving from being from developed to the other side because you've already like 2.5 billion people on earth has one or the other Apple devices. And what makes me bullish around Apple is they've been very, very conservative in terms of the capital allocation. Unlike a lot of the other companies which have been spending billions and billions of dollars to capture AI, and it is not only this year. If you look at the acquisitions of Apple, they don't acquire many companies. We don't hear Apple making big acquisitions. This week they did acquire a company, a small Israeli company in AI. But if you go and Google and maybe go to Wikipedia and look at Apple acquisitions, this is what I like about Tim is that despite holding billions of dollars of cash, hundreds of in on your balance sheet, he's not itching to spend it. I mean, we'll go and buy some new meme stock if you suddenly have a lot of cash sitting on it. It is very difficult for CEO to sit tight with money. And that tells something about the company that they are very prudent in terms of capital allocation, which is what I also like about Apple. They're prudent in capital allocation. And AI game will become a distribution game in a few years.
Vivek?
It will not be who has got the best model. It's gonna be who can get those models and the application on the models out to the consumers. And Apple has a so far as of now, Apple has got a big distribution through their devices.
So, quick question. Based on the fact it didn't really move, but a lot of the numbers look very, very positive. Thoughts on whether it's a good point to add some more?
But it's not trading at a cheap valuation, right? It's not that it's trading cheap. So
Mhm.
let's look at Apple. Uh, would you be willing to give? I mean, only in this quarter grew 30%. Of sorry, 15%. Are you willing to pay like 8 times sales and 30 times forward PE for a company that annually has been growing 2%, 6%? That's the question that you need to ask. I mean, earlier the whole issue was around, oh my God, this is a 2% revenue growth company. Why I'm paying 35 times forward PE? That time it was like 35. Now because the estimates have gone higher, so it come down to 30. 30 is not cheap. But I don't know, when you'll get it, whether you'll get it cheaper or not. So you may want to DCA on it
Well,
because
this
the
has become
company is.
Yeah, but
so
that's the
basically I would look
revenue.
at the
Sorry, go
I,
ahead,
I'm
Rajiv.
Yeah, I'm saying to myself that I would look at expected growth rate. And I do some numbers. I have a whole thing going. So implied expected growth rate for AMD today is 244%, whereas Apple is only like 16%. So Apple is going to be like Microsoft was for about 10 years, where it's like a cash cow. It's
Yeah,
cash is coming, but it's not growing, and it doesn't want to because the managers inside don't want to take any risk, and therefore
true.
there'll be no growth. They,
So
they, they
it may
went,
not
they,
be.
they pulled, see how many things Apple pulled away. So they started a car initiative like 6 years ago, and they canceled it. They hired an AI head from Google. They fired him.
That was the biggest mistake, worst hire.
All kinds of things.
Gyanendra.
They don't go forward. So basically, I think if I read the people's mind in there, they don't want to like risk their career or whatever.
Yeah, I'd agree. Is they don't seem to be really coming out with, the next big innovative product, right? As you would have had with Steve Jobs and stuff. It's like just incremental improvements. But to the point, the earnings per share, continue to grow quite a bit, right? Just looking at it, 608 to 746 to 788. That's like, 608 to 746, 25%, and so on. So it seems like, from that metric,
Yeah, but
you're
it's only 2 digits growth rate, right? Look at SanDisk. They grew 600% and they're expecting to grow 400%.
agreed.
Apple is
But
not. Yeah, it is. It has become. It's not as growth a company as it used to be. But I'm saying I cannot write it off because at the end of the day, for me, it's not the growth. It's what left after you subtract everything. That's as a shareholder. That's what for me. I'm not talking about stock price.
yeah,
Again, stock price market loves and short term in terms of the growing companies, right? But I want to look at when I'm looking at a pure from a business perspective. Hey, what are their end margins? How much cash flow are you generating? And that's what I focus on. I think Apple is still good, but it could be a great. It could be like a great value play, which you can hold it for a long time and not worry about it. Companies like SanDisk, etc. Let's talk about it when we have when the AI tide turns over. What happened to that stock? You have to constantly think about that. On Apple with these results, you don't have to think about it.
agreed, right?
Consistent that
You
way.
you have crazy increases in all the storage, SanDisk and all of those guys, because there's a supply constraint.
Yeah,
But once they get it, then that thing's going to come crashing down, right?
yeah,
So
it's a great growth revenue growth business, but I moved away from focusing on revenue growth to hey, you should be, can you give me can you if you're getting $100 and you're spending $98 to get the $100, then nothing left out for me.
And
But
another way to
stock traders might love that you're growing 100% year over year.
and another way to look at Apple is basically their services revenue is way higher than their device revenue. So that ecosystem basically locks you in, and that revenue is recurring. It's kind of a is a what do you call the consumer defensive kind of a stock where money just keeps on rolling in. You love it or hate it, ups and down doesn't matter.
Yeah, it's like Coke and the Walmarts have been a great long-time compounders, right? I don't think in any one year they have given you amazing performance, but small compounding over a long term works out well. Whereas we'll have a stocks which have been a stellar stocks for 2 years, 3 years, and then they fizzled out, or maybe 5 year, 10 year, and then they went nowhere. Now I'm looking at a SanDisk. It's been amazing stock. It's up 1600% over a year. I don't know. I can't pull plug on a SanDisk because their margins are like pathetic. Right? It's a growth story. It's a revenue growth story. It will continue. Stock might continue to go higher as long as the AI story goes higher. It's not a great business. Understand the difference between the business and the stock price. These two things could diverge. If you can time the market, you can follow Sandys very closely and say, hey, I want to get an exposure because it's a roller coaster that is going higher, and then get off before the roller coaster start to go down. All power to you. I cannot do that. So I'll wait and watch. I'll cheer for you from the sidelines. It's not a great business. They have a huge revenue growth, but they have to spend a lot. At least I'm looking at the annual. It's not that just this year. They are in a business. Okay, so SanDisk was, I think it was spun out, so we don't know a lot more financials. But they create a storage business, and the Western Digital was their parent company, right?
Is this the same with Micron?
DC. I don't know. I have not looked at Micron in terms of Micron's
But surely they're
margins,
also in a
etc.
supply constrained environment for the short term. But it's interesting that the short term is projected to be at least a year out.
Yeah, I mean, come on, a year out is short when it comes to the investing journey. All right, let's get back there. I got a 19 minutes. We have to head out. Microsoft, good results. Cloud revenue crossed $50 billion. There was nothing to, they beat on top line as well as bottom line. Like revenue grew 17%. Bottom line EPS was up 60%. I think it is because probably there's something related to yeah, I know why the EPS is up. Why the net income is up 60%. It is because of the revaluation of their investment in OpenAI, right? So don't get super excited by that their net income grew by 60%. Some of that has come from the OpenAI investment. That has nothing to do with business as such. What market generally focus on? How much their Azure has grown? I forgot to mention it here, but their Azure grew 38%, and which was little less than what they've grown previously, which was 40%, 39%. So market is like, oh, come on, your Azure growth has slowed down. That's one concern why the stock fell down. Number two concern is their CapEx has accelerated. It's up 66% as compared to the last year. That's concern because unlike, and I know I'm going to talk about Meta, and the Meta stock was in an opposite direction, even their capex increase. And RPO increased by 110%, nearly to $625 billion. You might question, when Oracle had announced the increase in their RPO to almost $400 billion, the stock was up 30%. Remember that quarter of Oracle? The stock was up 30% after the increase in IPO. Market just loved it. Now, why the market is not loving the similar, I think it was here, Q2, right? Why the market is not giving the similar love to Microsoft? Microsoft said, and market has become wiser since Oracle, is that Microsoft said that 45% of this $625 billion is coming from OpenAI. Or you can look at this half glass full or half glass empty. As an investor, I'm like, at least 55% is coming from others. OpenAI market is a little bit generally little jittery about the OpenAI and its future because they made so many commitments and they don't have too much of revenue and they are raising more and more capital. So sometimes market, depending on what day it is, if you are associated with the OpenAI, market will reward you for that day. And if you are associated with the AI, market will punish you. Right? Sometimes we have seen some companies saying we are tying up with AI, maybe we'll have AI models on our hyperscaler, market will reward them. Sometimes on the other hand, market like Microsoft saying 45% of revenue is coming from OpenAI. They say, come on, OpenAI is already challenged. We don't know how they're going to get, they made $1.4 trillion of commitments. How are they going to get it? So this whatever, 625, 45% of that is whatever, $250 billion or whatever, $300 billion is questionable.
So I look at things in a very gross bird's eye view, and my view is
Consumer
that the cloud has matured, and that's why Amazon is cutting 16,000 people. Cloud business, which swung up in 2016. I remember my friend going up to Seattle to join Microsoft then for cloud. I didn't even know that. So anyway, it's peaked. So these guys, both Microsoft and Amazon, will be affected by that.
Yeah, but peak means still grew at 38%. I mean, if you call 38% as peaked, is it our expect? I mean, you're right. Market's expectations have to change because we have seen growth of over 40% in Azure, year-over-year growth of over 40%. So we think, oh, come on, you're doing only 38%. That's not good, right? And I think market was expecting maybe 39%. There is
You
a
saw
1% here or there,
you
right?
saw 26% cloud revenue here in the.
So that's the overall intelligent cloud, 29%. I'm only talking about, and this cloud revenue includes something else also. I'm talking about pure Azure growth,
Hmm.
right? Pure Azure growth, and let me just probably pull up. Yeah. Let me see if I can get, did I update my data?
Yeah, so they keep buying back the stock that artificially inflates the
Yeah,
price of.
Azure growth is 39%, not 38, it's 39%. But last quarter they grew 40%. So again, the question is, and when we'll talk about Meta also, market is not able to figure out, uh, get a line of sight from your capex to your return on investment. Because if you look at their Copilot, hasn't been that great a success. I mean, they talked about they got a 15 million seats on Copilot. Is that it? You're spending like billions of dollars on this capex and you saying 15 million seats on Copilot?
Bing sucks.
Right? Yeah, I'm not disputing that. So I think market is, that's what the market is concerned around on Microsoft. Their spending and then their capex. But again, it could be an overreaction, whatever, 10, 12%.
Well,
Possible.
Vivek, I'm kind of interested. I mean, I use Copilot more than anyone else, but I mean, it's not very good, but at least it works,
Uh,
no caps.
I turn off Copilot because it's so annoying for me. So I have Office 365. I have to figure out how the heck I should turn off those interrupting their Copilot prompts. It shows up on my Excel. I don't want you. Stop. It's so invasive. Then I have to figure out how to go and turn it. I have to actually Google and find out should I turn this damn thing
A
off?
new version of notifications we got swamped with in the last 10 years.
Yeah, I'm like,
Yeah.
anyway, let's talk about other company which talks about CapEx, which is Meta. Um,
Sorry, there was a question where someone asked if it's a good opportunity to buy Microsoft now or potentially it might drop.
we don't know what's gonna happen in next 6 months or a year. But if you don't have Microsoft, uh, this may be a time you could dip into it. Again, I don't want to project anything around, short-term basis. And for me, when I say buy, it means I want to hold it for next 5 years, minimum 5 years, 10 years, 15 years. If that's the case, it still generate good amount of a cash flow. It does share buyback. Margins are okay. This AI growth story has not been working out as what is being working out for other players. So capital wants to move to somewhere else. Right? But this is not a company that you can just write it off. They got their tentacles in every enterprise.
Not as much as Google Corporation. So, in
Google,
other words, Microsoft doesn't have as many tentacles in AI as Google does.
yeah, I mean, Google is great on the consumer side. Microsoft great on the enterprise side.
No, no,
Google,
Yeah.
I'm also referring to the very deep technical research bench in Google. I've worked with AI stuff they have the best, the stuff that will come out of Google, which will shake the AI story in the next couple of years, will be much more than
yeah. So
Microsoft.
if you're betting on AI, right? Google, and that's why I think Google is my. You look into my portfolio pizza, right? It's rose to become the third biggest position. Google is great on that one. But I'm looking at, can you, when you, if it comes to selling to enterprise, apart from technical, you also need to know how to work with enterprises. Microsoft own that space, and Google has not been great in terms of on the corporate side. They've been great on the
Yeah,
consumer side.
I'd agree with that, right? I work for a large company. We use that, and that's always a challenge with Google is technically great products, but you're trying to integrate it with everything else you're doing and all of that. And it's like, oh, well, this is how we do it. So
All right. We can probably talk on the in the breakout rooms when I'll join on the phone. We go through some of the Meta. So Meta, all great. Revenue up 24%. It's like such a huge company and still growing at 24%, right? That's amazing. Beat on revenue, beat on EPS, free cash flow $14 billion, $81 billion on cash, healthy market, healthy balance sheet. Lower operating margin, but that's okay because they've been spending a lot more on AI, and so it's expected. What I liked was this thing. Not only that, using the AI tools, not only that they are able to generate their ad impressions, at a healthy pace, they're also able to monetize it better, right? So if you look at the what at the end of the day, Meta is just an advertising selling, it's a advertising company, right? Everything that they spend should result in able to provide better ads so that they can then charge their customers more, and both the things were visible. Now this, despite the fact that they continue to lose money on reality labs, I think market thinks that they can get a better line of sight on AI expenditure when it comes to Meta. So analysts were expecting $110 billion of capex for 2026. Right out of the bat, Meta says we're going to spend 115 to 135 billion dollars. Had it been any other company, the stock would have dropped 10%, right? But no, it's Meta. They could see that. I think their investments in AI, because they're not dependent on other customers, right? Now Google and Microsoft, they are dependent on someone else buying their co-pilots. Meta is not depending on someone else. Meta is saying, I can use this AI in my business. I can grow the business more profitably, which is what I think the market gets that line of sight, which they did not get it in Microsoft. So despite the fact that they increased their capex more than market expected, they were still rewarded. And if you look through the earnings transcript, I think Zuckerberg said very initially itself, I will not have all the questions to your AI stuff in terms of what we are building, because at an early stage, and even between they said, sorry, you don't have an answer to it. We'll have to wait for it. So here's a CEO who is coming and telling you, I'm going to spend hundreds of like $100 billion plus in a capex, but I can't tell you exactly where it's going. And market still rewards it.
it's a kind of interesting question on that, right? Last quarter,
It
same
was
problem.
reversed.
Yeah, they spent more than they were expecting and they tanked. This time they're still spending more than they're expecting and went up, right? So it's okay. Same story, two different results.
Because he explained it this time. This time they explained it.
Yeah. So last time, if you recall, I said I'm gonna buy Meta shares because it was overreaction. I upped my position by almost 20 or 30%. So far so good. It has worked out. We'll see after 5 years what happens, right? But market in the short term, you never know how they're gonna react, and that's why I don't even want to. I mean, analysts have to find the reasons, but we never know what the real reasons are. It's a short term market will just overreact. We never know what's happening. Final company, ASML. Okay, I got 6 more minutes. Revenue was okay, but I don't know. I mean, all looks good. ASML is monopoly on their business. We were all concerned about their bookings. So their quarterly net bookings came out 13.2 billion. Their guidance was still okay in terms of what they've been projecting it, and they were able to recognize the revenue from their top, the most, I would say, sophisticated machines, high NA customers. I think it's Intel and SanDisk, uh, not SanDisk, SK Hynix gosh, SanDisk is all over my head now. SK Hynix and Intel, they got the latest machines. They have run through the tests, and now they can recognize revenue of that. And it's a good business to own because they got a monopoly in their EUV. Despite all the fact that we're hearing from China that they have figured out how to generate EUV, they are probably years away from actually doing a commercializing it to get the yield that they can get it from ASML. Now, given the fact that a lot of these capex are happening, given on the chip side, given the fact that all other companies, their demand for chips continue to grow, this is basically your picks and shovels play, right? 5% revenue growth, it is little seasonal. When you look at ASML, don't look at quarter to quarter basis because the revenues could be a little lumpy because each of the machines cost like $300 million, $400 million. And if the revenue recognition move from one place to another because the tester in Intel met with an accident and now they can't test it this quarter and again give you sign off on it. Oh, your revenue moved, went down $400 million. When you're looking at ASML, look at a yearly basis. Don't look at a quarter to quarter basis. I do quarter to quarter basis to see if management has changed directions, etc. Not nearly from numbers, because revenues are generally lumpy. They also purchase shares. Management outlook is that they say the overall outlook has improved. 2 nanometers, and we talked about logic as well as memory. EUV, we expect revenue to be up significantly this year, which is great. And they don't sell EUV in China yet. Hopefully China and US will come to some friendly conclusion, and if they start selling EUV in China, they'll be even better for them. They also talked about corporate restructuring. What else? Intel qualified and accepted their system. Yeah, there is nothing which was a concerning. I look more from is there anything that I can find concerning when I'm looking at quarterly report or more on a long-term outlook. Didn't find anything, so still happy shareholder. Okay, last topic for today. Stocks buys and sells. I bought a little Microsoft. Not became greedy by the fall in the stock, but I had a iron condor trade on Microsoft, so my put spread was in the money. So and I had, when I put the trade a month ago, I said I will buy it if I get it at this price, and I bought it. I sold ASML, same stuff. I had a call spread which was in the money, and if you look at ASML, the stock has gone crazy. This year, stock is now trading at, I think, above $1,400. Then if I have to sell a little bit of it, it's got called away. That's fine. For March, I already have now put an iron condor on it. And if it corrects, I'll probably buy back the way I bought for Microsoft. BSOL. Again, these I share it because we talk about stock. You should know what I buy or sell so that, if I tell you, hey, Google is doing good or this doing it bad, you have some idea what I own in my portfolio. BSOL, which is Solana ETF, I exited my position. I told you Tastyworks have a broken beta weighted value numbers in it. I have to do my mental gymnastics when I'm trying to do my delta adjustments, and I was tired of it. Waited for 2 weeks, they didn't fix it, and I told the customer service rep I'm going to sell my holdings. I'll buy it on a competing platform. I haven't bought it on I have to move the money to buy it on other platform, but I just sold it on my Tastyworks. Very small position, doesn't move the needle anyway. So this is how my portfolio looks like at the end of last trading day of January. SPY continues to be the biggest holding. Number 2, third is Google, became number 3. Nothing has changed in top 15 except Berkshire Hathaway has gone down and IWM has come back in number 15. I'll give
So
you
you have just 100% equity exposure, no fixed income commodities and currencies asset classes.
not in top 15. I have ICSH, I have TLD, none of them figure in top 15.
Oh, but that is just a cash equivalent. What about like commodities exposure
I
or
have
currencies
GLD. I have a little
exposure
bit
or
GLD.
fixed income, bonds? No.
Not bonds. I have only long-term 20-year plus TLT. No other bonds.
Okay.
I'm not a bond guy. All right. That's the crypto we already talked about. Nothing else to talk about it. Right on time, man. 12:15. I have to step out. Any questions on portfolio? So Melly still stays to be it actually got during the month. Melly was number 3 because the stock the Google had risen up, and then now the Melly is back to number 2.
So what was your portfolio performance percentage wise, like 2%, 3% up in January?
January, I think I'm 2.5 or something. At some point of time, I was like up 4.5, no, maybe 2.5. I don't. All right, I'm coming out. Yeah, but who cares? I have to wait for a yearly one.
Oh,
Yeah, I'm not worried about what happened in this month, but since you asked it, I think it's 2.5 or something.
Vivek, this is Tom real quick. Do you have an idea of total equity exposure? What percent of that would you classify as the tech sector?
oh, I think about 30% or more isn't.
Maybe.
Oh, for your portfolio.
Yeah, mine would be a little deep. I don't know. I'll have to tell you now. Is Amazon a tech sector?
Yeah.
Yes.
Or Amazon a consumer?
No,
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 tech.
it's tech.
Tesla is a tech or is it consumer discretionary?
Tech.
Depending on how you define. So you have to tell me, because if I go by the definition
If
of how the
if it's
S&P,
inside XLK, if it's inside XLK, then it's a tech.
okay, I'll have to run through that. But this does not include my, let's say, short calls on QQQ. So these are pure equity positions. So I do hedge by, I have probably 7 or 8 short calls on QQQ for different expiration and different strike prices. Maybe 200, 300 negative deltas I'm holding on QQQ.
Do you feel you're sufficiently diversified? Is, I guess, another way to ask the question.
I'm trying to. I have my US exposure is 66%. Non-US is whatever the remaining, which means including commodity, I consider as worldwide. So like GLD, I consider as non-US. Crypto, I consider as non-US. Then Meli is obviously LATAM, so 66% over there. Bonds and the cash, including both, would be maybe around 5% max. So not too much of a holding cash. I'm trying to raise more. If some of those covered calls stay in the money, probably a little more cash. But all I'm trying to hedge mine is by selling calls against, or the covered calls against my holdings or against the indices. All right, guys. So that's finishes today's discussion. I'm going to open the breakout rooms and
Thanks.
I have to step out.